Welcome back. You're watching Lunch Money. In fact, Motilal Oswal Financial Services, as we know, has reported earnings. We have Ramdev. In fact, we have Kamath, who's the CFO at MOSL, who's joining us on the phone line as we speak currently. Good afternoon, Samir. To start off with, a pretty spectacular set of numbers currently, wherein the revenues have gone up by 71%, profits have improved by 134%. So if you could just tell us, what is it that has worked in this quarter?
Sure. See, I think this is the first quarter where we have seen some of the initiatives that we have panned out over the last 3 or 4 fully panning out. This robust growth of 75% has been well contributed by almost all our business lines. So we basically break our business into 4 main business lines. The traditional capital markets business, which is broking and investment banking, which also delivered a robust growth of about 48% this quarter. The asset management business, where we have now scaled up to a meaningful size of about 18,000 crores AUM across PE and the AMC business. That also delivered a very healthy growth of about 46%. The newly set up housing finance venture, which is almost 3-year-old venture, which is focused on affordable housing. Now that has scaled up quite significantly in the last 3 years. We are at a book of about 3,000 crores. And if you see on a year-on-year basis, that's seen a top line growth of about 222%. So I would say all the business initiatives that we've seeded over the last 3 or 4 years, and we've methodically built these businesses, I think that is panning out now, and a full impact of that has been seen in this quarter. Also, what is noteworthy is that all these businesses are extremely profitable. What is the mix of PAT is also coming healthily from all these businesses. So if you see this quarter, the PAT of about 102 crores is the record highest PAT that Motilal Oswal Group has recorded since inception.
Samir, a very good afternoon to you and congratulations on a very strong showing there. How do you see performance going forward? And also, can you just give us a little more texture in terms of the AUM growth?
Sure. See, I think each of our business lines are now built for scale. I think the last 2-3 years went into getting the positioning and focus right. And I think any business requires a bit of tailwind, which fortunately the market environment has provided us. So we're extremely excited about the growth prospects of each of the businesses. I think some of these businesses, we have just scratched the surface in terms of the potential and the size and scale that they can achieve. Coming specifically to your question on the AUM side, I think our specific positioning on the asset management side has been as equity specialists using the QGLP investment philosophy. I think that specific position helped us scale up this business quite significantly. I think if you see about a couple of years back, our AUM was only about 1,500 crores, and that scaled up 10x to about 15,000 crores now. So that's a business which has been building meaningful scale. Our net flow market share has been rising. It's about 4% of the equity net flows. And I think that is a business that can build tremendous scale and contribute significantly to the bottom line going forward.
Right. If you talk about where capital markets are concerned, how has the performance been over there? Because last couple of quarters, we did see some bit of muted moves that did come in from the industry as a whole for the capital markets. This quarter, we have seen some bit of an improvement from the industry as well. How is that section of the market panned out, and what's the expectation going ahead as well?
Sure. See, I think last quarter, you saw a lot of good traction on the retail volumes. If you see in the market, retail volumes actually drove most of the volume growth. I mean, retail volumes are up about 35% sequentially, whereas institutional volumes are up only about 11%. Having said that, I think over the last 2 years, you've seen the average volumes in the market and the intensity and velocity go up significantly from the lows they saw in 13 to 14. From our own perspective, realizing this trend early, we have made significant investments into manpower, technology, and also exploring our network for financial distribution of products. Those investments have resulted into significant market share gains for us and also client additions. And also, if you see in the last cycle, our business of capital markets has seen a 10x growth in profits. If you compare the last cycle of 2004 to 2008, our profits were almost up 10x from bottom to peak. That's the kind of operating leverage if you do the business right. I think we are playing for that opportunity. I think the market environment continues to be favorable, and we see significant scale and potential in that business as well.
Okay, Samir, a quick question really in terms of contribution of the capital markets businesses. We're talking about the broking, investment banking to the overall profits, and also a follow-up in terms of any particular risks that you are watching for carefully.
See, I think as in any business, I think the biggest risk here is the markets itself. If there is any volume collapse or any event which, what you've seen, for example, last quarter of the last financial year, you saw the volume get muted. I think, but if you look at it from a longer term trend perspective, I think these volumes will pan out. I think the India growth story remains strong, and volumes of the market are a reflection of the belief in that story. So I think that is what it is. Embracing technology and keeping your cost low is the success mantra of this business, which we have been practicing for a long time. If you keep focused on that, I think the opportunity is immense for us to lap up.
But Samir, if you could also tell us in terms of a contribution of capital markets to the overall profits is concerned, that was overall at around 35% in the previous quarter against 71%, in the previous fiscal. And in terms of our asset and wealth management is concerned, that did go up to 26%. In this quarter, have we seen any market share gains in both of these segments? And what's your expectation going ahead as well if you talk about FY17 as a whole?
Sure. If you look at segmental business itself, adjusted for some treasury gains, our capital market business itself delivered a 43% growth year on year and sequentially as well. The overall reason for the mix to change is largely because some of the other businesses which are in the build mode have turned significantly profitable, and that's why the overall profits are also going up. And as a mix, obviously, capital markets has come down from the 60% plus range to now about 25%. The asset management business has seen significant traction this quarter because of the carry we have earned on our first private equity fund, which is exiting. The PAT contribution for this first half has been about 63 crores from that particular entity. And that again establishes a proof of concept of having managed the full life cycle of a private equity fund, which augurs well for future fundraisers and much bigger scale launches in that sense.
All right, Samir Kamath, that's the CFO at MOFSL, joining us. Congratulations on the quarter gone by, and thanks for taking us through the fine print of those numbers. And with that, it is a wrap on this edition of Lunch Money. Up next is Market Guru. Do stay where you are.